In recent months, there have been clear trends in the fund flow data in the UK marketplace. Investors have continued to buy in the property sector and the absolute return sector, and have been selling in the emerging market equity sector. This highlights a clear behavioural trend amongst investors. They nearly always seem to chase the recent performance. So both property and absolute return funds have been performing much better than most other fund categories in the last year or so, and emerging market equities have been amongst the worst of the categories. This tendency of investors always to chase the recent performance sadly means that they tend to do much worse over time than their investments really should do. In the US, Morningstar has done a lot of work highlighting what's called an investor return, which is always much worse than the actual performance in underlying funds, because investors have a distressing tendency in general to buy when things have done well and to sell when things have done badly. And therefore their market timing decisions are generally quite poor. And this leads to a much worse outcome for their total portfolio than if they've just been much longer term buy and hold in terms of their investments.